What up, what up, what up, what up? Welcome back to the table where everybody eat. Y'all know what to do. Hit that like button for your boy. And if it's your first time to the channel, hit the subscribe button and notification bell. That way you don't miss out on the plays and updates we bring to you guys each and every day in the market. Now, here we are with a quick update on rare earth stocks. I know you guys seen these things sell off throughout the course of this week, starting with USAR, CRML, and then IMSR, which a lot of people were chasing these due to a lot of excitement. And I want to explain why I didn't chase or my community didn't chase, not because we don't like the theme, but because patience matters more than hype. Now, let's start with USAR because structurally, this one right here behaved better than the rest of them. You had momentum, but you also had cleaner pullbacks, as you can see, which provided clearer levels and better risk definition, which I'm going to go ahead and pull this trend line up on the daily just because I see something right here real quick. We'll go to the bottom of that sniper fair value gap. We'll actually zoom in a bit. You guys remember all of these levels, so everything's still the same from the context. Just watch the prior video on rare earth stocks where I covered all three. Or you can watch the video on USAR. But going from the daily down to the 4-hour, you can see how we held this trend line for a couple of days. This is what I was saying about that structure and how contextually this one looked better than CRML and IMSR. However, we also had this 2153, which is the area we wanted to get above. Now we're coming back to this 1901 zone, which I had said was going to be an area that I'm looking for us to hold. If we lose that, I do see, yes, our golden pocket down here, but on the 4-hour time frame, I see the 200 SMA. That right there could be our bounce spot at 1678. That's if we end up losing. I believe this right here is around about maybe 1785, roughly $18 is around the top of that sniper fair value gap. And that's the difference between something you could build around versus something you're just reacting to. So we gonna wait and see how price acts when it gets down to this level. Now, CRML. This one here is the one that I really had my eyes on. I had my money on. Granted, USAR was the safer play, just like maybe MP Materials. That was irrelevant. We ain't talking about that stock. But when it comes to CRML, I really thought we were going to hold that golden zone of 1326. And this is where I had wanted people to slow down. I said it publicly in the Discord community, everybody eats, how I wanted a pullback ideally under 10 bucks. Not because I was bearish, but because risk was getting stretched. I showed them on the monthly time frame how this was slightly looking bullish. As you can see, we had this 921 cross up on the moving averages, as well as when we have went up, we came back down, and we are sitting right on top of these two candles, as well as this whole area right about here. So although this looked bullish, I was anticipating or saying I would love for us to pull back around to that 10 buck spot. And as you see right here in the post market or in the after hours session, we are now trading at $10.31 when we close at 1066. But before we go to that 4-hour time frame to really zone in and zoom in to see where we're really sitting at, you had this sharp move from around this $7.26 zone right here at the top of the year on January 2nd. It extended from the moving averages, well, basically from the 21 way up here around 22, a prior high, prior resistance right about here, an area that we tried to hold back in October of 2025. And then as you get extended over here, that's where volume usually fade off. Sellers may step in. If we get a drop like this, especially once we lost that 21 on the daily, murder she wrote, down you go. But if we come to the 4-hour time frame, now this is where it's getting slight ugly, but I don't mind. Because as we are beneath this 200 and we fell beneath that 1125 zone, we are now approaching the sniper fair value gap or the golden pocket, but we have a line in the sand around this 929. I'm not saying that we're going to lose this golden pocket, but this is the area that I was looking forward to accumulating or get some shares. The bottom that I see right about now is roughly maybe 819, which is the bottom of the sniper fair value gap. However, you guys can see that 726. We lose that. That's definitely where I'm going to hold off. I'm going to change my whole thesis on this rare earth Greenland play. Not to say that I want to put any fear or any FUD out there, but however, you guys know how I move. I trade structure, not hype. And since nothing broke quite yet, I'm waiting for my buy-in. Now, last but not least, IMSR, which is a little different. And I'll be honest here, the liquidity just isn't the same. That doesn't mean it can't move. It means you have to respect how fast it can move against you. That's why I stayed cautious. Same theme as CRML, but a very, very different trade. You can see right now on the daily time frame. Let's zoom in a tad bit just so you could get perspective. Here we are. We are back into the sniper fair value gap. Matter of fact, how does that look? We are back into the sniper fair value gap. And as we are back into it, we tried to have a little wick bounce right on top of that wick right there. However, this thing still looks weak. I'm gonna bring the drums back up, and we gonna drop down to that 4-hour time frame and see what we really working with. Now, like I said, how this here was the same theme as CRML, meaning we had this massive move from January 6th, or even if we go back a little bit, let's see real quick. Basically, the top of the year with this consolidation, January 2nd, we had this massive move on all rare earth. We went from here, 611 to 1330. That is over 100%. Now, granted, we aren't too extended from our moving averages like CRML, but I'm also noticing something else. I could go both ways with this. Fix this a little bit, and then let's see if I really seen what I seen. I think I did. Oh, nope, I probably messed it up. I think I messed it up a bit, but we're going to keep that there. And then we're going to follow this over here. So as I did that cross up, we could see right here, clear as day, we got this whole area right there that's rejected. Slight little rainbow down beneath the 200 SMA. Now, like I say in the first video, if you guys aren't aware or don't recall, IMSR was a SPAC. The ticker symbol was HOND. And it ran up as high as I believe like 30 bucks, maybe 40, but definitely like about 30 bucks. Once they had the ticker change from HOND to IMSR, the stock opened, I believe, or the high was around maybe like $21, $22. So with all of that being said, once we came down here and now we're rejecting the 200, with this stock being new on the market, the 200-day moving average has just now started on January 20th, 2026. And as it started, we came down, we lost it, we're rejecting, but now we're at the bottom of my sniper fair value gap. Sorry, y'all, I'm coming a little bit under the weather right about now, if y'all can hear it. So a good idea doesn't always equal a great trade. However, now with us pulling back to this zone, if we could bounce or not go too far beneath the sniper fair value gap, maybe back around that $6, high $6, low $7 range, and then start to get a little curl here on the 4-hour, and then get back above that 200, because now I'm realizing also we got a depth cross right there with the 21 and the 200. So all of this here was telltale signs for us to hold our horses, slow up, see what we're working with before moving forward. So overall, when people ask why the pullback, this is why. Early buyers take profit like we did. Late buyers panic, structure resets. So after the early buyers take profits on this run, late buyers start selling, we start breaking through levels. Look at how it goes each day, each morning. Market open, tank, consolidate. Market open, tank, consolidate. Market open, couple of days, consolidation, which that actually was, almost a week straight. And then boom, right beneath that 200, that's normal. This is what we call healthy. So if you guys like how I put this together, or like how I walk you guys through these videos, we provide the levels, structure, and patience. And if you want to see how I'm managing these in real time, this right here is where I do it. As you can see, the AMD trade recap up 300% on the 180 puts. Could have held for more, but that contract was high risk with collapsing extrinsic value. We trade structure, not hype. I tell the community this over and over and over and over again. Once price hit my 193.30 downside target from 203, I closed a risk-heavy position and rotated into the contract with better extrinsic value, allowing me to stay in the move without overstaying the trade. This isn't about catching the absolute bottom. It's about protecting capital and letting probability work. Everybody eats. So again, if you missed the first move, you didn't miss the opportunity. I'd rather be late and right than early and reckless. But appreciate you guys for watching this video. Stay tuned for the next one. Be sure to hit that like and subscribe button. Share this video out to your people if you think this will help them as well. But once again, thank you guys. Much love. We out.